All right, go for it. Hello and welcome to another edition of the Twin Cities Real Estate Pros podcast. My name is Ron Johnson, licensed real estate agent with RE/MAX Advantage Plus, joined as always by David Nelson, who is also a licensed real estate agent with RE/MAX Advantage Plus and the leader of the Imperial Home Team. Also today on the show, we're going to have David Youngs, so two people named David, one show. David Youngs is with Progressive Lending Solutions. He is a mortgage lender. He'll tell us about what their company offers and what sets them apart from some of the other places people may get mortgages from throughout the marketplace. If you haven't joined us before, we appreciate you being with us. We are live on Facebook on our Twin Cities Real Estate Pros podcast page. You can find us a number of other places as well on Facebook, including the Imperial Home Team page. We are also on SoundCloud with the audio version of the show. We're on YouTube on the ImperialHomeTeam.tv page. You can find us on Twitter, LinkedIn, and then also on our website, which is above our heads here, TwinCitiesRealEstatePros.com. So I appreciate you joining us for the show. We like to talk about the market in the Twin Cities real estate area. Generally speaking, David is out of the Lakeville office and works.
Not generally.
Well, for the most, well, you had one in,
No,
where was, in Dundas, right?
Dundas.
So that's not in Lakeville.
I was scared.
Yeah.
I was scared.
So, so we cover the Twin Cities as a whole. I live in Golden Valley, office out of the Minnetonka office. I tend to stay in the northwest area in South Metro, not quite south of the river, where David's more and his team more south of the river.
Correct.
Yep.
Very much so.
And so that's kind of what we've got going on, and it's been an interesting weather pattern for us so far, so we're really interested to see how things kick, if the spring does come earlier and some of those houses get back on the market, and then if the spring market hits us.
Well, plus two, you're looking at, I'm looking out the window right now and we're seeing grass, although it's brown, with this little bit of snow, which means, photos can be coming up pretty quickly. Once the snow is gone, all of a sudden you can take some nice exterior photos and get your house in the market. So I'm officially yesterday, the day after the Super Bowl, is kind of the unofficial day of the spring market.
Right. Yep.
And we're seeing it already. Activity's gone up. A lot more people interested in selling a house. Like you said, with the warmer market or the warmer temperatures, there's just that more anxiousness springs in the air, and people want to get moving on their house.
Exactly, and that's one of the reasons, what the purpose of this show. We'll talk about listings that we have on the market, listings that we have coming on the market, and also some of the needs that we have for our buyers. I went out with, I think, 5 buyers of mine last week, so there's buyers out there ready for houses, and they're looking for a variety of things. I've got one buyer who's ready to go, a cash buyer. We sold his house a couple of months ago now. Cash buyer up to about $125,000 cash, needs 1 bedroom, 1 bath with a 1-car garage. Pretty simple, basic stuff. No stairs though, so a condo with an elevator or a townhome, 1-level townhome without any stairs is what he's looking for. So if you've got one of those kind of in the west or northwest metro, I'd love to hear from you, whether it's a pre-listing or something you're thinking about selling. We'd love to get that on for a buyer. I've got another buyer who is looking in either Bloomington, Richfield, Eagan, up to about 380 to 400 if it's a really rock star house. They need 3 bedrooms at least, really want 4, 2 bathrooms, 2-car garage, and they would also like to have either that 3rd or the 4th or even 5th bedroom, maybe down in the basement or set away from the rest of the houses. We always hear the family, the 3 bedrooms on one level, 4 bedroom. 3 bedrooms on one level is fine, but they'd like to have that 4th or that 5th somewhere else set apart. So if you've got one
for the deviant teen.
Exactly. Yep. Yeah. That's the punishment room. So if you've got one of those, I'd love to hear from you either in Bloomington, Richfield, Eagan, kind of that 380 to 400 mark. Like I said, 3 to 4 bedrooms, 5 is fine too, with one of those bedrooms set off from the rest of the house. I've got another brand new buyer who I've been going out with just this past week, looking kind of in the I guess that would be the northeast metro, Oakdale, Shoreview. He wants to be close to Lower Town, within about 10 or 12 miles of the Saints Stadium, basically, is kind of the mark, the new Saints Stadium. So if you've got up to about 200, Roseville, Como Park, Highland Park in St. Paul, Shoreview, Mounds View, Oakdale, Maplewood over in that area. I'd love to hear from you. Eagan as well, so I'd love to hear from you on that. So those are 3 of the buyer needs that I've got, and I've got plenty more. So if you're listening and saying, hey, that's my house, and you need a buyer, there are plenty of buyers out there for you. And also, David, we like to sell houses as well, get our listings sold, and your team has some.
And just touching base too on the buyer needs, we have quite a few buyers looking in the Lakeville and the immediate surrounding area for price ranges between $250 and $375. that's a hard price range right now because they're selling pretty quickly. So right now, mostly in Lakeville, homes are being built above 400. So the homes priced below 400 are pretty rare. So if you have a family home that's in good condition, a nice yard, and not really on the main street, let us know, because in Lakeville, Elko, Farmington, and even up into Burnsville, between 250 and 375, high demand for these homes. We need them. Contact us, numbers everywhere. Please let us help.
Yep. Yeah, probably the best way to get a hold of us, Twin Cities Real Estate Pros Podcast, then you can .com, and you can figure out how to find us from there. Otherwise,
Right.
phone, email, smoke signal, Facebook, Twitter.
There's a thing called Google.
Google, that
Ron
works too.
Johnson, David Nelson, both of
Yeah.
Remax Advantage
Don't Google
Plus.
Ron Johnson. Oh yeah, if you make sure you put the Remax Advantage Plus in there, because you'll find also the guy from Fast Times at Ridgemont High, and I don't know if he sells houses, but
Or David Nelson,
Or, yeah.
the old David and Harriet, or what it was back in the.
right. But yeah, put the Remax Advantage Plus on there. That's a good point.
Thanks.
Yeah. So, so you've got on your team, you've got a pretty hot listing on the market.
Yeah, Don Seepersod just put this listing up for sale. It's a great property, so let it go.
All right, so we'll take a look at this one, and then like I said, we've got David Youngs here. He's a mortgage lender. He's going to help us out with all of our mortgage questions right after this. But let's take a look here at Dawn's house. And then we'll come back out and just chat, and then we'll go to the other video, if that works.
Yep.
Any idea, this will freeze, or what will this do? Who knows?
It'll,
We'll find out. Does that make sense what we're doing?
okay,
Video one, video two coming after.
I just mean in general.
I just pause it.
Okay, so we're ready to come out? All right, so there's a listing there for Dawn Seepersod. She's one of your outstanding team members.
Oh.
She sells a lot of houses, and that if you want to find a listing or get your house listed, she'd be a perfect option for you.
And I want to plug Dawn a little bit too. And we can't really promote them yet, but she just picked up 2 listings in the Boulder Point neighborhood where she lives.
Okay.
Great homes in the Boulder Point neighborhood in Elko Newmarket. It's in the golf course area, so expect those to be coming on soon. As well as I've got 3 properties in Lakeville that are, I can't tell you the address yet, but there's 4 bedrooms and 4 bathrooms, just like last year. And they're gonna be priced anywhere between 400 and 700 coming up in Lakeville. So stay tuned for these homes, it'll be awesome.
All right, yeah, so if you're interested in that one, yeah, Dawn Seepersod will be able to help you out. And if you're interested in any home, the most important thing is to figure out your financing. Because you can go online all you want and look at all these houses. You can go call a real estate agent or show up to open houses, but you can't get into the house without a mortgage unless you have a pile of cash. So that's one of the things that we're
Right.
gonna talk about here, and you put together this series of the 7 steps to home buying, and
Correct.
the most important one, that's why it's number 1, is getting a mortgage.
Correct, yep, that's the most important one, because you can't put an offer in unless you're pre-approved.
All right, so we're gonna take a look at this, and then on the back end of this, we'll have David Youngs in here to tell us all about mortgages here on the Twin Cities Real Estate Pros podcast. All right, so why don't you slide in? Perfect. Come in a little bit more.
We got people liking it too, 5 people watching.
So can you go just a touch more?
Is that good?
Cool, it's working.
Yeah,
And I just took that banner out of there too, so it looks better.
So that's with Facebook Live, that's what's going on right now.
Cool. So cozy.
Just kind of give me a heads up.
It'll go into, now that you completed step 1, and it'll kind of go into step 2 will be whatever, and I'll pause it. Okay.
All right, so that's this first step in buying a home, is figuring out how you're gonna get that thing paid for. And like I said, if you don't have the cash on you, then you need a lender, and you need to get a mortgage, and that's why we have David Youngs here. He is with Progressive Lending Solutions, so we appreciate you coming by to joining us and letting us all know about the mortgage
Thank you
process.
for having me, Ron. Appreciate it.
All right, so tell us a little bit first about yourself, and then we'll get into Progressive Lending Solutions.
Okay. Well, I have a young face. But I actually started in 2005, licensed in various areas of financial services, but became mortgage licensed in '05. Been with two companies. Started with my current company, Progressive Lending Solutions, back in 2010. Coincidentally, the same month that RESPA came into play. Many people may know that phrase, but that's when all the regulation came in.
Oh, yeah.
Licensing was required, changed the industry completely. So as a licensed state originator, I'm licensed in both Minnesota and Wisconsin, so that allows me to work with any client in any corner of both states. So geography is not an issue, which is a nice benefit to have.
And just kind of touch base really quickly on that. Considering you're Wisconsin and Minnesota, you'd be surprised how many people just work across the border or live across in Wisconsin and then work
exactly.
in Minnesota. So it's nice to have that ability. We do a lot of buyers and sellers that go from Minnesota to Wisconsin, so it's,
Yeah.
the flexibility is amazing.
Yeah, cabins as well,
Oh, yeah.
yeah, in Wisconsin.
My wife grew up in Hudson, Wisconsin, so family's over there, so I figured that's probably a good thing to have, is that connection to the Wisconsin side.
So how about Progressive Lending Solutions? It's a broker versus your correspondent lender or your bank or your credit union.
Correct.
So let us know a little bit about what the difference there is with a broker.
Sure. So Progressive Lending Solutions, our company was founded by our owner, Joe Becker. His name is known by many in the industry. He was a big shot over at Conseco Lending, I know, in the past. We're actually one of the oldest brokerages in the Twin Cities. Stuck through it through the ups and the downs there. We're just a team of a small handful of consultants, but one thing that we're very proud of that I definitely have to make mention of is because of what we've done for our clients, the approach we take, we have an A+ rating on the Better Business Bureau, but even better than that, we have more reviews than any other mortgage company in the entire state of Minnesota or Wisconsin, and they're 100% positive.
Wow.
We don't have one negative review. I don't know many companies that can say 100% customer satisfaction. So that just speaks volumes for our consultants, the approach we take, and of course the clients that we work with. One thing that's nice too is even though we are a broker, unlike many brokers, which maybe are very small in operation, we have, like I mentioned, a team of consultants as well as in-house processing. So we can do everything internally regarding the paperwork, the disclosure process, handling the loan beginning to end there. And everything's nice, simple, clean, which allows us to keep our overhead low. And by keeping our overhead low, of course, that allows us to transfer that savings onto our clients.
So you mentioned that you're a broker. So what's the difference between like a broker, a bank, like a corresponding lender, or maybe like a direct lender?
Sure. Yeah, that's a good question.
Thank you.
I
try.
The two things that I would probably sum it up with is the process flow and
Okay.
cost. Without going into too much detail, when you go to your retail bank, traditionally you have layers and layers of management, you have processing, you have underwriting, then you get all the departments, the marketing department, the compliance department, the advertising department, and all the budgets that come with that, the lease space, the buildings. You add that up, you might have heard the expression, or I like the expression, too many cooks in the kitchen.
Mm-hmm.
Sometimes when you have that, that means because of that extra overhead, that usually results in higher rates, higher fees. It gets passed on to the client. It's not always realized, but that's how the industry works. Somebody has to pay for it.
Oh yeah, always.
So the smaller you can get that operation down, the usually cheaper the overhead is overall. So when you go to a retail bank, traditionally they have a set parameter, a box of what they work with. They've got their niche products, and they can do some great things for clients. But unfortunately, a lot of client situations fall outside of that box of maybe what they need versus what the bank offers. When you go to a correspondent lender, usually they open up a little more, they can do a little more things because what they do is they may have, say, a $10 million line of credit that they offer, or they offer loans for through their own company. They fund the loans in their own name, just like a bank would. But then after the loan closes, they turn around and sell that loan off to one of the big investors out there, perhaps directly to Fannie Mae or Freddie Mac, perhaps Citibank, Bank of America, things like that. So when they sell that off, they make a little piece of the commission there, what's called an SRP. Gives them a little bonus there, but it still forces them to underwrite loans within that box that those banks buy from.
Okay.
As a broker, we don't actually fund loans directly. We set you up as the client directly with the wholesale underwriter or investor that we want to use, so there really is no middleman. The money comes directly from them. And then, of course, each bank has their own policies on how they hold the loans or service loans. Many service them themselves. But because of those resources, we can access any wholesale bank anywhere in the country that we want to work with, which is literally, there's over 100 companies out there. So it gives me a strong competitive advantage because the chances that my almost unlimited resources can't outperform another bank's one set of product offerings is very, very slim. So it's really nice to have that to really make sure that we're doing the right thing for the client and giving them the right fit for their loan.
Yeah, and so it's flexibility is really what I'm hearing. And it's because you don't have to, you have your traditional loans that you have to follow Freddie and Fannie on. But if, like some of the other banks, you're saying if they sell them off, then you have to meet not only that bank's requirement, but you have to meet the investor's requirement, where you have a bigger pool of investors and people to back your loan. So you can do, just, I guess, there's a few examples, somebody maybe with bad credit, or, not top of the line credit, or even someone who maybe has good credit, but say they're self-employed and on paper, because you people play, games, right, with your taxes.
Oh, yeah.
On paper, you don't
Yeah.
make that much money, but if you, in reality, the person makes some money. So you're able to shop those clients to your pool of investors and lenders and be able to help out a larger pool of people.
Correct, yeah, I like to try to explain to my clients that I work for them, I'm not working for a bank. If one bank isn't playing ball with us, we can't get the deal done somewhere, we can't help you get the loan, then that allows us to look at other options. We pull it from one place, go to another if we have to. My loyalty is to my client. I want to make sure that we do the right thing for them and that we have the best chance possible of getting that loan approved and getting you through that process to closing without any hiccups, if we can help it.
Yeah, and then, I've had clients too that actually have written offers on properties of mine, and the cool thing is you look at it, they've gone like with a broker approach.
Mm-hmm.
So what Ron was saying earlier, this guy was self-employed, and his wife was also self-employed, but they had the funds to buy it, but a typical bank's like, well, you're too risky, but they didn't. So the brokers came in, offered, great incentives, great programs, they closed very quickly, because the process isn't drawn out like a typical US bank, Wells Fargo. And it was an extremely smooth transaction. So
I'm glad.
yeah. So the broker is a nice way to go.
Yeah, that wasn't me, but that's great to hear.
I didn't know you had David Young's, but now I do.
So tell us about somebody once gets, somebody's watching, or, they find you on the internet or find you online or whatever, like, hey, it's time for me to buy a house. Where do they get started?
Well, if they want to find me, the first thing they would probably want to do is, honestly, 15 minutes over the phone, just give me a phone call. That's my preferred method. But if they want to find me online, you can actually go to my website, mnhomemortgages.com, and you can actually click on the link there, contact me to get pre-qualified now. That'll take you to a little section asking if you're buying or refinancing, and then once you just give me your name, phone number, email, gives me a way to contact you, I'll reach out and we'll have that conversation. But really, that's the focus. Before we start getting into numbers and taking a full application or anything like that, I want to establish what are your goals, what are you looking for, how can I help you, and then take it from that approach, an educational approach versus the sales approach.
And then when somebody is ready to either check you out online or have that 15-minute conversation, what should how should the client prepare for that?
The number one thing that I would say is, obviously, if you have your financials in order and you know what you have, you know how much income you make, you know how much money you have in the bank, if you have a general idea of that, that's helpful. And if you have all your documents together. But I would say if there's one thing I would stress is have your goals clearly in mind. And if you don't, let's talk about that. Let's try to clarify that. Because you might have two buyers that want the exact same thing on paper, but they have two completely different goals of how they want to go about it, the timing, how long they maybe plan to stay in the home for, how much they're comfortable paying. There's a lot of different factors that could influence my recommendations or advisements on what we would look at. So having those goals clearly in mind, I think, is a very big factor.
Because a lot of times too, buyers will come to us and say, hey, we're pre-approved for $300,000.
Mm-hmm.
Well, maybe it's a young couple. Like, well, we also want to plan on, we're going to have kids soon, we like to have a dog, blah, blah, blah. So then it's like, okay, don't put all your eggs in one basket.
Right.
You got to leave. So again, lifestyle kind of factors in, even though you're approved for a certain amount.
Right.
A good lender like you are going to talk to them and say, right, this is what your monthly payment is, but if you're going to be having kids down the road, don't be spending all of your money, kind of pull back the reins a little bit.
Yeah, actually, when clients come to me and say, I'm already pre-approved with such and such place for X amount, in my mind I'm thinking they need to run. Because honestly, that person, if that professional really was ethical and doing the right thing for that client, looking out for their interests, not their own, trying to push them into the highest loan they can get. They should be having a conversation of what do they feel they can comfortably afford? What does their
Right.
budget look like? Let's go through that aspect of it and then talk about where you probably want to be. You know, we can have a conversation about that level of where it should be, but we certainly don't want any buyer to come into this trying to max out their financing right from the get-go and turn what should be an enjoyable experience and closing on a new home into a financial burden the moment they get into it, a payment shock of what have I had just done.
We call that house poor.
Yeah, house poor,
Yeah,
yeah,
yeah.
and you get buyer's remorse too, but I think David brought up a good point, David. I'll just go with both, but you're saying, you know, depending on how you live, like most people, I think, live on a monthly budget, right? So somebody says you're approved for $300,000, you have no necessary concept of what that
Right.
actually means when you're
Right.
buying a house, especially if you've been renting or living with your parents or whatever, because you have, you know, your insurance, what's that gonna mean? And your, property tax is gonna be different if you live in, say, Linden Hills versus if you live in Crystal. You know, so those are things, that matter, and your homeowner's insurance, you know, because if you're quoting somebody for their mortgage, if somebody's got a, you know, $1,800 a year taxes versus $5,000 a year taxes, that's a couple $100 difference on a monthly basis, right? So those are, I think, the kind of things that you're saying as far as
Right.
having those conversations.
And unfortunately,
And
many.
even the association fees too, people forget about that.
Yeah, that's a very good point. Yeah, it's sad that because many people that do come to me that have a pre-approval or pre-qualification from some other place, often they've never had that conversation. They don't know what their payment is. They don't fully understand that whatever they were quoted may not actually be what it ends up being, depending on things like that, homeowners insurance taxes or association dues.
Yep, and the rate that day.
And the rate that
Right,
day,
yeah, or within,
exactly.
you know, a relative
Yeah, if you're
window.
buying a house and closing 2-3 months from now, potentially, you know,
Yep.
depending on your timeline, whatever we're quoting today, clients have to understand that that will change a little bit down the road. We don't know what it's going to change to. You know, I wish I had a crystal ball, of course, to know what rates would do.
Yeah.
But it's something just to be aware of, that it is an ever-moving target, but we want to have a really good concept of where it is and prepare for that. If we know you're buying in an area that might have a little higher property taxes, or you're going to be buying a condo or a townhome that has association dues, maybe we want to back that purchase price down a little bit from what you're looking for to make sure that you can afford the payment.
Right. All right, so we, you know, we appreciate you coming in and sharing all this knowledge about mortgages, and we'll kind of give you the floor if you'd like it. Just what else do you want to say about yourself? What do you want to say about Progressive, or just the process?
I guess maybe a couple things to share just about our company. One other thing that is nice and helpful is because my compensation is paid from the banks that we're already pre-negotiated with within the interest rates that we get wholesale, not retail. We get paid a little better per loan than what your average mortgage person does, which may sound like a bad thing, but the great thing about that is because it comes from the bank, the client is paying $0 in lender fees. And because of that, I can afford to spend more time with fewer clients. We don't have those quotas, management on top of us telling us, you gotta close X amount of deals this month, you know, to meet your quota, and that's it. No excuses.
You're not a broker puppy mill.
Yes,
I mean,
exactly.
there's a few of those out there where once they get you in the door, they get you signed.
Right.
They're on to the next one because
Right.
they have to eat.
We can really take our time with the clients, and by passing on that savings of no lender fees, so if you have no origination fee, no processing fee, and no underwriting fee right out of the gate, on average, that's hundreds if not thousands of savings for the exact same rates that you may be able to get at the bank on any given day. So it really gives us that competitive advantage. Another thing I wanted to mention is there's different loan products out there, different types, and I don't want to go into detail on all the different products that are out there. We'd be here all day. But the primary loan types that are out there, and this is actually on my website as well, but you have conventional loans, which are insured or backed by Fannie Mae, Freddie Mac. You have FHA loans through HUD. You have the VA loans for veterans that qualify. You have USDA loans for rural housing. Those are all the government loans basically, and then there's products within those that you can work with. Anything outside of that, though, falls into a fifth category called portfolio lending, where a bank is lending money based on their own underwriting criteria that they've created, that they're going to offer a loan for based on these interest rates, these programs, these costs, and that's where you really get into the unique concepts that can help clients, like your situation you mentioned, the self-employed family.
And that was a portfolio loan too.
Exactly. So things that physically Fannie Mae, Freddie Mac, FHA don't allow for. But even sometimes within those products a lot of banks have what's called overlays or restrictions on what they will work with. Even if, for example, HUD says, we'll allow you to go this high on a loan for a borrower for FHA, and this one says we'll go this high, and this one says this high. Well, what's the actual limit that HUD sets?
Right.
You know, there's differences there what banks will offer. So knowing what those limits are, where to go with it, how to get it done, there's a lot of different things that you might want to work with within those same products even. I have one client example right now where she went to 2 banks, and now I'm the 3rd one coming in. It's a back-to-back-to-back closing, so it's one of those stressful situations.
Really?
But it looks like we can do it. We're probably going to be able to help when these other 2 places couldn't, just because we don't have those restrictions. So that's one big factor. One common misconception about brokers that maybe I can just speak to is a lot of people think when you go work with a broker, number one, because underwriting isn't done by us, it's done by someone else, somehow it's going to be slower or it's going to be less successful. But in reality, we have full access to all underwriters, email, phone calls, and we're usually in and out of underwriting in 24 to 48 hours with most of our banks. It's very quick, same speed if not faster than a lot of those correspondent or retail banks. And there's another misconception that if you go with a broker, you don't know where your loan's going to go. It's going to get sold and sold and sold and sold all over the country, and you don't know what's happening. But the reality is many of these banks hold the loans, and even if they do sell it for servicing, so someone else is where you put someone else's address or where you send your check to, or you log into a different website, it's still the same terms, and it gets sold once, traditionally.
Yeah, no, that's important. Your mortgage terms cannot change.
Exactly.
It's illegal.
Yeah.
So yeah, I think that's a good point. People may think, okay, they're gonna sell it to, ABC Bank, and
Right.
now I'm gonna owe more. Yeah.
Yeah, I think it's a common fear, and it's talked about a lot when you talk with others in the industry, that's a common fear about brokers. So to alleviate some of that, that's not really accurate. It's just as good, in my opinion, substantially superior to other routes you can take. But really, the key thing I think is whoever you're working with, whether it's a broker, a correspondent, or a retail bank, there's good professionals in every industry. I don't want to knock any one side of it. The key is really for anybody, do the research, look at the company, look at the person you're working with, go online. You can pull up for any consumer the NMLS Consumer Access website. You can pull up any person's name or license number and look up their background, where they've been, their history, and you can check out each individual person. Do that research. Know who you're working with before you make that decision. And maybe even if they have managers, teammates, check them out. You want to make sure you're going to get taken care of. Your questions are going to get answered. You're not going to get steered into a product or a program that's not right for you, but it's right for that bank to make them a profit. That's not what we want to.
Sure.
We want to do.
All right, well, no, that's all great information, so we appreciate you coming in to clear all those things up and also let us know about the process, and hopefully we can have you back on the show, and maybe we can pick a topic and dive deeper into
Sure.
it.
Thank
So,
you. I appreciate it.
appreciate you having us.
Thank you for having
appreciate you coming, or having us too, because I guess you had to deal with us too. If you're looking for a home to buy, need a mortgage, Parade of Homes, David, would be a nice place to start looking.
Yeah, it's coming up really soon. March 4th through April 2nd is the spring Parade of Homes. So if you are a seller and you're thinking about putting your house up the market, highly recommend kind of getting things in gear, because you want your house on the market during the spring, because it's free marketing. It is. You've got tons of people looking at, the whole tour, and it's the whole Twin Cities. And so when you put your house up for sale, you're gonna be capitalizing the increased buyer market that's gonna be out looking at Parade Homes, and why not? Come look at your house while it's for sale.
Perfect. And then, you'll see all the signs around, and, what number you are in the Parade of Homes and all those kind of things. And there's a couple different versions of it too. So, it's a great way to just kind of, even if you're looking for remodeling ideas or,
design.
Yep, design ideas. So some people are like, okay, well, I could sell my $300,000 house and buy the $450 or $500, or I can go look at one of these other houses and spend, $100,000 or whatever to remodel it. So that's another really good place to look at. We'd love you to buy new homes all the time, but if that's not for you, then the Parade of Homes is another place to just get design ideas or know what you want when you're going shopping and things like that. So.
And research builders, because actually we're going to be repping Brandel Anderson Builders here pretty soon. So it's a good way of coming out, checking out people's products, seeing what the new trends are.
Exactly.
And you know what? And do your research before you buy a house. It's kind of expensive to buy a house these days.
It is. And then when you get home, go ahead and look us up on Twin Cities Real Estate Pros Podcast and say, hey, I was out on the parade of homes, I saw this home, I need to go get it, and then we'll help you out.
Yeah, because we will help you.
All right, so that's going to do it for this week's edition of the Twin Cities Real Estate Pros Podcast. Once again, we are on Facebook. We're on Facebook Live now on the Twin Cities Real Estate Pros Podcast website. We're also live on the Imperial Home Team Facebook page. You can find us on YouTube at imperialhometeam.tv. We're also on Twitter and LinkedIn, and the audio version will be on SoundCloud. So all the places you can find us, and you need one reference point, the best place is TwinCitiesRealEstatePros.com. Again, thanks to David Youngs with Progressive Lending Solutions for coming in and sharing information about mortgages. We'll have a link to his website as well if you want to get a hold of him for some more good information in addition to what he provided here today. You got anything else before we get out of here, David?
No, it's spring market started, so if you're looking to sell, now's the time to get in the market going, and if you're looking to buy, hang in there.
Their houses are coming.
Houses are coming on, the rates might be ticking up a little bit,
Yep.
so just have faith, it'll get better.
Yeah, so if you've got a house to sell, if you're just kind of thinking about it, there are people out there who want to buy it.
Oh, yeah.
And there's buyers definitely ready to go.
Chomping at the bit.
All right, so yeah, that'll do it for this week's edition of the Twin Cities Real Estate Pros Podcast. We appreciate you joining us. We'll check you out next week on the Twin Cities Real Estate Pros Podcast.